Hello traders, I hope you liked that new intro. I think it's pretty cool. Hope you guys too do as well. So in today's video, we are going to be talking about a quick scalper setup that here in 2022 I found to work pretty well on altcoins. So without further ado, let's dive in. For this, I'm actually going to minimize that so that you guys can see. So the two tools that we're going to be using today are both free tools that you're going to be able to access right now or after the video. They are aggregated open interest and the volume profile. With aggregated open interest, what we're looking for our scalping setup, which for those who don't know what that is, that's very short-term profits and losses. Aggregated open interest are basically a metric to see how interested are traders in the current market. And what that means is when open interest increases, that means that positions are being added and created. When open interest decreases, that means that positions are being removed and reduced. So a market that's becoming very interested would be open interest rising as the market rises or falls. Another thing to look at beyond just interest is, are traders being trapped? So when open interest continues to rise in a certain consolidation phase or at a market top or bottom, that can be also a sign that traders are being trapped, and that point might become support or resistance in the future. Now, on the notion of being trapped, probably one of the best, if not, the best indicator for looking for support and resistance throughout a price chart is the volume profile. This will really show you great points of high volume where traders are typically trapped. And these points do typically become support resistance. So the first thing that I want to focus on is just solely open interest. So if you look here, if I said you had to either, you have to use 10x leverage right now to go long or short, what would you do? Would you 10x leverage long or would you 10x leverage short? I'll give you guys 5 seconds. A little hint is pay really close attention to the current trend of open interest on the bottom part of the chart. So the correct answer, I know it looks a little weird, is actually you would want to buy. That was a price point that actually price did not go down after that for a very, price still hasn't gone down from that point. So let's go look back at the original, really what's going on here. Well, what we can see is that as price is rising, we're seeing a lot of positions being added, which to me is indicating that one, many traders are interested in where the market's headed, which is a sign that we'll continue doing that. And two, more importantly, this is also indicating to me that there could be a lot of shorts that are trapped at lower prices. For those who don't know, when many short traders are trapped, that tends to propel the price higher on a short squeeze. Additionally, it makes it harder for price to go lower because shorts that are trapped might want to close out their positions by buying in order to avoid a liquidation. So the price kept rising. Now let's talk about the volume profile. So when you look here at KNC USDT, which is the perpetual asset on Binance, we see a lot of movement, but I really want you to focus on the volume profile. That's the blue and yellow kind of like candlestick bars you can see, but they're vertical. And where do you see the longest or the highest point of volume on the volume profile? For those who do not know, I'm going to reveal it in like 5 seconds, but for those who want to take the crack at it, go ahead. So at the point of about right below 3.2 on this price chart, you can see there is a lot of volume being transacted there. What does that mean? Well, that means that if price was to fall, it's going to be very difficult for price to fall lower than 3.2 on its first try. Basically, if price were to begin a downtrend, it might take multiple tries for it to break the 3.2, 3.1 level because of just how much trading went on in that area and because of just how many trap shorts there might be. So here's what ended up happening actually. Remember that point of right below 3.2. Price actually wicked down exactly to the point of the highest point on the volume profile right here. It wicked down exactly to that price point, just below 3.2, with a beautiful little fall in open interest, indicating people closing out positions. This would have been a phenomenal place to have placed your limit buy orders. Now, for those who are brave enough, a strategy that some people can do is putting, if they find a support level from the volume profile, putting bids in that area and then planning to take profit on a move back higher. Or if, they think the price is going to rise, placing offers at a high volume point in order to short and then, be able to buy back lower and close your short. So this would have been a very excellent place to have placed your bids right on that volume profile, high volume node. Okay, now let's use both of them in conjunction. So we're not just going to be looking at the volume profile, and we're not also going to be looking just at the aggregated open interest. We're going to look at them together. The first thing I like to do is to look at aggregated open interest with the current trend. This is Waves USDT perp. What do we see going on here? I'm going to reveal it soon, but all I'm asking you guys is, as the price is falling, do you think this is a healthy downtrend with trapped longs and with a lot of interest? Or do you think that this is a downtrend that will likely reverse? The answer, place your bets. So yeah, this is a very strong downtrend and really not something that I would ever want to long on this current price chart. What's going on here? Well, if you look at the day of the 4th, which is on the bottom chart, you can see it says, April 4th. You can see that there's actually a very strong increase in open interest from the beginning of the day of about 230 million. At the end of the day, or at the highest point of the day, it approaches almost 300 million. So there is a large increase in open interest. During this increase in open interest, price is actually trending lower. This is telling me that these 60 to 70 million new positions, as you can see from the open interest, are longs and shorts entering, with many longs being trapped. This is a very strong sign that the price is going to go lower. Finally, now that we know that this price is probably going to go a lot lower, looking at the volume profile, if you wanted to short, would you A, just short immediately at 31.15? B, would you just, not short at all? Or C, would you place offers in the around where the highest volume point is? Or D, would you place your offers above the highest volume point? And there is a correct answer here. So the correct answer is C. If you had placed your offers just at the very tip of the high volume point, you would have gotten a beautiful fill on a short. You can see here that the highest volume point is about 32.6, 32.7. And what ends up happening is price actually doesn't even get to that point because there's so much resistance. It actually can't even go that high. It just goes to about 31. So really what I think would have been the best strategy here is either to do option A, to actually just shorting immediately wasn't a bad idea, but option C definitely is the safer route, to wait for the downtrend to go down a little bit more and then place offers on a retest higher. Because you know that there are so many longs who are trapped at higher prices, it's going to be quite unlikely in that current case for price to rise. That would have been one strategy. But the correct answer is C. The second best answer is A. And then, probably the worst answer would be not to short, because, shorting here would have granted a lot of good money. So now, I have one final example. Awesome. Okay, so with this one, let's do this one really quickly. I remember why I put this example in, because this one is a little bit tricky. So what we see here is, what do you guys see in the aggregated open interest? Price is rising, open interest is doing what? So open interest is rising here. Looks like we're reaching a resistance point, meaning price is currently around a pretty high volume point. What do you think is going to happen? Do you think that the large increase in positions, i.e. open interest, means that price is going to continue just going higher? Or do you think that this large amount of volume on the volume profile means that the price is going to have some trouble going higher? Which one is it? So the correct answer here is price just went higher. Look at this. So if you had bought at 16.4, which would have been and felt a little weird buying at resistance, it actually would have been an excellent trade. You would have never once during this trend been out of profit. Not once. Why? Well, one of the most beautiful things that you can see after you enter into an uptrend, a very strong one, is open interest just not decreasing. That means that people are piling positions on and on and on, and no one's really decreasing their long or short position. That's a very good sign, because as you can see here, open interest increased a lot. It went from about 350 million up to currently 600 million. with not many falls in open interest. The only times that open interest kind of fell was around right before 3 o'clock on the far right, and also at about 21 o'clock, but really it was not much of a fall at all. Finally, that point of resistance of about 16.5 had been touched so many times and retested so many times that it was a very weak point of resistance, because the more touches a point of resistance has, the weaker it typically gets. So just because we see this very high volume bar, around resistance does not mean it will be strong resistance, because what you need to factor in is how fresh is that point of support or resistance. Fresh being, has it been reached multiple times? If it has, price is probably going to continue going beyond it. And also just how much volume was transacted there. And if you look at this kind of distribution of the volume profile, it doesn't look like there is a lot of volume up at the top. It just looks like there's a, average amount compared to the rest of the chart. So that would be the answer here. Buying would have been phenomenal. All right, let's go to a live chart. And I'm also going to show you guys how to set this up, because I know I'm going to get a million questions. Oh, wait, how do we set this up? And I'm also going to reactivate this. So I hope that was helpful. What you're going to do if you want to set this up is you click indicators. You click volume profile visible range. And then these are the settings I have for Bitcoin. I have 20% width. I disabled that just to make it simpler on the eyes. And then my inputs were that. Now, this is by far, of course, not like a perfect setup, but it is the one that I like to use. So one thing I do want to show is a BART pattern. So for those who don't know what a BART pattern is, it's basically when price rises very, very rapidly and then consolidates and then falls very, very rapidly. So how do we predict them? Well, this kind of combination of the volume profile with aggregated open interest does a pretty good job. First off, what do we see open interest doing as this price was rising? And here's the point I was talking about right here. Price is rising clearly. We can see that it went from 44 something to about 48 at the very top. Open interest is barely rising, guys. I mean, it's going up, it's going down, it's kind of just consolidating. That's not a good sign for a strong uptrend. A strong uptrend would have clean open interest just rising and rising, indicating people getting trapped at higher prices. That's not happening here. Open interest seems to be all over the place, with large falls here, with large increases here that just never really went anywhere. Open interest it's not really clearly trending, right? But let's go look at the volume profile. At what price point do you see the highest amount of volume being transacted? There are two price points where we see a lot of volume being transacted, and they're both consolidation phases. As we can see here, the largest amount of volume, of course, was at about 47.2, and it was also at about 44.4. So if I was looking at this BART right now, or I knew, I actually was able to trade this, thank God. But basically what I saw, when I can show you guys, is I saw there was not much interest in this uptrend on Bitcoin. Two, selling here is probably good expected value, and placing bids in the 44K range is probably going to be a good idea. Why? Well, there was a lot of trading that happened around 44.4, which means that there are likely a lot of trapped shorts who might be waiting to get out at break even. If we can place our bids around the 44K to 44.4K range, it's probably going to be a pretty good place to do that. And what ended up happening was really interesting. Price actually went down to the exact point of the highest point on the volume profile. So if you look here, price did BART, and then it actually went back up a few $1,000s. So price actually went down to a low of about 44.2. The highest point of the volume profile below the upper consolidation point was actually 44.4. Had you been fortunate enough and lucky enough to place bids at 44.4K, you would have had a perfect fill. You would have been filled at the very market bottom where a bunch of volume profile interest was, and then price went higher. But what do you guys see here? Look at that. What did I just talk about? Remember? Price went up, open interest did not change. It just stayed flat. That was not a good sign, and price fell. Because you don't ever want to see this kind of thing happen. This is where we just were, guys. Price was going up, but there was just no open interest. There just weren't enough people opening positions. And if people aren't opening positions as a trend is trending, that's a very bad sign. That's a sign that there's not that many traders who are interested in that current trend. And because of that, price just went right back down. So to conclude this video, what I love about these two indicators, and the reason I pick these two for a scalping setup, meaning on a 1 minute chart or a 5 minute chart, is they can be used on any coin really. Aggregated open interest and the volume profile are such good volume and sentiment indicators that there really is not a coin that it won't work on, which is rare because there are a lot of other indicators that do not work on certain coins but do work on some. But these two are a pretty formidable setup that you can use pretty simply too. So to recap really how I like to use them and how you can use them if you so desire, is I like to look at aggregated open interest for just mainly to see, are traders interested in the current trend and are traders consecutively being trapped as the market goes higher or as the market goes lower. If open interest is flat and price begins trending a certain way, I do not have a lot of confidence in that trend. If price goes, if price goes up but open interest is continually rising with no one closing their position, i.e., no one open interest not falling, that's a very strong bullish case. And that's typically a situation where price just continues to rise. And people short because they think it's at a quote unquote high price, and then they get wrecked at a higher price. Finally, the volume profile is phenomenal for choosing where to set your bid and offers, for where to type in your limit buy and your limit sell orders. It can be a really good spot to find support and resistance points and to place good limit orders at, especially points of very high volume that are fresh, that haven't been touched multiple times. So with that, happy trading. I hope that these two free indicators are going to help you out. And if they do, then trade well, trade good, and happy trading.